What's up, guys, and welcome back. Johnny here. And in today's video, I'm going to show you a stock that is a 71% buy rating and has tremendous growth over the last 5 years. Now, this company is Roku, or ticker symbol ROKU. Now, right now, they're at $398, and they have a total return a total gain of 2,400% since September 27th, 2017. Now, I'm going to tell you exactly why. One out of every 3 TVs right now in the world is Roku capable, Roku enabled, or just Roku period, or they use the Roku stick. 1 in every 3. That is a lot of Roku TVs. They're up $382. You could have bought this company September 27th for $15, which is just amazing. The last year in just alone is up 190% in just a year. 3 months, they're up 80% in 3 months. Could have bought this company for $220. It is now $398, almost double. That is just insane to me. Might as well say double. What's $4? Now, it's a 71% buy rating on Roku. I'm going to show you some stats on Robinhood. I'm going to show you some stats on the Street Rating Report right here. And I'm going to go to Webull and show you some stats on here. So let's get started in the video. Make it short and sweet. So, like you see here, $398. Now, for everyone who doesn't know what Roku is, I'm sure everyone knows what Roku is. It engages in provision of streaming platform for televisions. I mean, we're talking, you could watch Netflix and Vudu and Hulu and Roku and a lot of different things off these Roku TVs. It enables these smart TVs to stream these different channels, which is pretty awesome. CEO is Anthony J. Woods. They employ 1,650 employees. Founded in 2002, which is pretty amazing, seeing how they didn't get publicly traded until 2017. So this company has been around for quite some time. In fact, their market cap is $46.96 billion. So they have a lot of money to play around with. They're at 5 million average volume, which is just insane. So it has a lot of liquid to get in and out of positions. Now, there's some good things that have been said about Roku. 71% out of 24 analysts are rating this company a buy. 21% are saying a hold, and 8% is saying to sell. Now, on the bull side, real quick, they're saying that it's well positioned and take advantage of a secular trend toward increased content streaming in the US. Makes sense. People are getting on YouTube more. They're streaming more. They're doing more of these videos. Roku streaming service neutral stance will continue to attract both new streaming services and customers, and Roku will be able to leverage its growing active accounts base to get better advertising rates. Now, some of the bears are saying, despite its tremendous subscriber growth, Roku has yet to generate operating income, which definitely can be a downside, because if there's no income, how does a company stay afloat? Roku is highly dependent on smart TV manufacturers, which can easily swap out the Roku OS for another competing platform. Interesting. Why not? Is there any type of patents or anything going on with Roku that can help keep itself in the game? Also, Roku's competitors are much larger with considerable more resources. If they focus heavily on streaming platform marketplace, then they could blow Roku away by competing on price and features. Kind of like Disney. Disney's doing it in a way, but they're only doing Disney products, whereas Roku, it doesn't care. It'll do Netflix, Vudu, Hulu, it'll do them all. So right now, Robinhood's saying their earnings per share is roughly around, looks like 10 cents per share, which isn't too bad. Expected earnings will be out February 11th. So that's pretty much all Robinhood has to say about this company. Not heck of a whole lot of stats or anything going on with this. So let's go ahead and go on to the Street Report. Now, I like to get this report from the Street.com. Jim Cramer, he's the man. I like his stuff, Mad Money and all that. This report actually came out January 3rd, so they're constantly updating their reports on here. As you can see, this is giving it a hold or a C minus. So you're like, wait, what? Robinhood's saying 71% buy. This is saying a C minus hold, almost a sell. No, let's go into it. Now, there's no dividend yield with this company. So right off the bat, I don't really care for it. Why invest in a company that doesn't pay its shareholders? I don't know. That's just something that you guys could decide later. Market cap is saying that it's there, 36.9 billion. They have been in a sell rating since 2019 and just recently went to a hold with this increase from 150 up to the 330 mark. Now, of course, there are 398, so they've actually blew this out of the water from 333 or 338 all the way up to 398. Saying in the past 3 months, which also has changed since, even just a few days since January 3rd, it's gone up 80%, which is pretty amazing. 157% on the year. Now, their revenues for the last quarter is 73%, net income 151%, and earnings per share is up 140% growth over the, I'm guessing, last quarter over last year's quarter. QR earnings still, not doing the greatest. Return on equity. I mean, it's all right. PE comparison. I mean, there's none. So, I'm not really too sure about this company. Roku's very impressive for growth, average 23%. The revenues leaped by 73%. Net operating cash flow has significantly increased by 105%. Yeah, because they didn't have any, to 21 million when compared to the same last year. Despite its increase in cash flow growth rate is still lower than the subsector average growth rate of 150%. So, this may not be a strong buy, and this is definitely something to look into. Again, this is not something I would buy. Their net income right now is negative $100 million. Yeah. Not something I'd be interested in doing right now at all. But again, that's for you to decide. I'm not trying to discourage you from buying anything or encouraging you to buy anything. I'm just stating facts that I see with companies that you guys call out. So before we get into the Weeble, I just want you guys to smash the like button for me. Let me know I'm doing a good job because I want you guys to enjoy the content I make for you. That's why I do this. So don't forget to subscribe if you haven't already. I talk about stocks, finance, credit, real estate, all that fun stuff. So let's get into the last section here. Weeble, checking this out, trying to get into this a little more and use it, maybe to transition from Robinhood over to this. I also use like TD Ameritrade to do some technical analysis, and I also use, NASDAQ calendar for dividends. Obviously, this one does not have one, but let's get into some Weeble stats real quick. 399.13 is what they're saying on Weeble, so there's a huge difference just from just from Weeble to Robinhood. It's saying 398.28. But it's just saying 399.13. So it makes me wonder, you know what I mean? Like how good Robinhood really is on staying current. Anyways, let's keep going. Market cap saying 50 billion. Nice. PE ratio saying negative 472. I don't think so. I will never invest in this company if it doesn't start producing some money and maybe even some dividends. So this company is tremendous growth, obviously. I mean, the price was all the way down at $76 in March and then shot up to basically $400. So a 2,700% growth, 33 million volume. Why? Because everyone's home. There's the pandemic's happened. Everyone's home watching TV. That's what they're doing. As far as news goes, And, you guys can look into your own news really, but I'm really not even seeing good things so far, so I'm not even going to dig that much deeper. Actual earnings per share right here estimated is negative 76 cents. No, thank you. You have got to be profiting to be put into my portfolio, no matter how startup new you are, how good you are, how much money you're making. That's just my opinion. You know what I mean? You got to make a little bit of profit. Net income is saying negative 59 million compared to negative 8. I don't know. I don't know, guys. Total revenue 1.13 billion. Operating income negative 65 million. I mean, I don't know. Balance sheet total assets 1.75 billion. Debt to asset ratio is 52%. I mean, they're doing better. They are doing better, definitely. But is it something I would invest in? More than likely, no, not right now. I would not invest in this. No dividends. This is also saying buy, 42% buy, which isn't bad. And they're saying their actual earnings per share is at 10 cents, so not too bad. Institutional holdings right here, saying 84 million, 66% owned. So just some cool little facts that I haven't really been able to share before. Pretty cool. Some different information here. So, guys, I would definitely do my research. It's definitely oversold. If I were to bring up some technical indicators on here, you would definitely see that it is, in fact, oversold. But, anyways, hope you guys enjoyed this video. And smash that like button and subscribe if you haven't. You guys have a great day.